JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 26th of August 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into this little chart, just wanted to have a quick update on what's happening here globally. So yep, as we can see, the figure is well, according to this source, the figure is very close to 24 million, but however, comparing to other sources, it already says that that we have surpassed the 24 million mark of total amount of infected people. The more important here is that we can see that daily cases are kind of on a bit decline right now. So they've managed to peak here in mid-August, and then now we're seeing a bit of a decline. Of course, that's great, that's good news. However, let's take everything with a pinch of salt here, and let's hope that it can go back at least back towards the levels right here, guys, because at the moment you can see that yes, it's quite on the high side. However, yeah, hopefully everything can start going back to levels, at least towards the levels that we saw here in April, and of course below that. But again, let's hope for the best. For now, let's keep on monitoring the situation, and let's keep on monitoring the situation with our indices. Now here, for example, the Nikkei 225, on Monday I talked about this one, and what I was saying that as long as the index remains above this downside line taken from the high of the 9th of June here and remains above the 21-day EMA as well, then there is a good chance we could see this one pushing higher. So as you can see, this is what happened yesterday. We had a nice opening gap here to the upside. It moved higher. However, it failed to stay above the current highest, or actually not the current, but the previous highest point of August, near the 23,339 zone. It did overshoot it, but closed below it. Today it also traded today traded virtually unchanged, but remained below this key important resistance area near the 23,339 zone. So this is what we're going to be watching for now. Yes, everything's kind of working out nicely according to this plan that I mentioned on Monday. So now what we need here in order to aim for a further move higher, we need that confirmation break, and ideally, well, sorry, should I say another confirmation break, and ideally a nice daily close above this area could do the trick here for more buyers. So that's why, guys, be very careful and wait for that confirmation break. Now, in order to consider the downside here, well, we would prefer actually to wait for a drop below this downside resistance line taken from the high of 9th of June, and then kind of consider a further move lower. For now, we're quite far from this downside line, so yep, in a way, the downside could be slightly off the table right now. So that's why we're going to be focusing on these slightly higher levels, but as I said, we need that confirmation break above the 23,339 level, or in other words, we need a nice daily close above that level as well. Now, jumping into Shanghai Composite, now here it's a slightly different story. The index is kind of trading in the red today. And the most important is that on Monday I talked about this index, and I was telling you guys to keep a close eye on the short-term upside support line taken from the low of the 27th of July. Yeah, you can see that today we're having a break of that area. However, probably the bulls should be watching this one carefully, because if this index comes back above this upside line and closes the day above this upside line, because don't forget it, we still have around 50 minutes left of trading here in this index. So if we get a nice daily close above this upside line, then maybe there is still a chance for the bulls to kind of drive this one higher and towards the 3,457 territory, which currently acts as a very strong area of resistance. But if this upside line, or should I say the daily candle remains below this upside line, then we will be watching this key support zone near the 3,307 territory, which, as you can see, acted as a very nice area of support, although we did get these little overshoots here, but we never got a close below it. So that's why keep your eyes on this upside line. If we get a nice daily close below it, yes, of course, that increases the chances of a possible further slide. Yes, we need that daily close below the 3,307 territory before getting a little bit more excited with a possible move lower here towards the 3,181 zone. So that's why keep your eyes on that one, guys. Could be quite interesting. Now, jumping into the German DAX here. So this index yesterday closed slightly in the red. And closed below this 13,100 territory. So if we look at the cash index and where it's currently balancing at, let me just quickly find that on my chart here. So we can see that the price is slightly above the yesterday's close, but still below this 13,100 territory. So in other words, you can see that this 13,100 level is quite an important one, and in a way what could happen here is that it could kind of maybe retrace a little bit to the downside here, maybe even somewhere towards that psychological 13,000 territory, and if it could and if the 13,000 is acting as a good area of support, then we could see a nice reversal here on a push higher. In other words, still probably keep your eyes on the 13,100 zone. Roughly around there, and a nice good daily close above that area could do the trick for more buyers, because yesterday we saw a nice strong move above this area, but it's still the index closed below it. So that's why wait for that confirmation daily close above the 13,100 level, and then we could consider further move higher. In terms of the downside, we would start looking at some lower levels if we get a drop below the 12,773 territory here. And then yes, we could consider maybe a further slide here, but until then, again, for now, to be honest, it seems that the downside could be slightly off the table, but even with the upside, we need some confirmation breaks first. Now, jumping into Brent oil, and finally we're having a nice move here, and Brent oil, you can see that yesterday it managed to rally and close not only above this 45.20 zone, but also above the 200-day EMA, which kind of increases the chances of a possible further move higher. Now what we're going to target is the 48.42 level marked by the low of the 2nd of March, and then of course we'll take it from there. If it wants to push higher, then yes, that's wonderful, but let's keep it short and simple, because it is a little bit of a difficult one here, but yes, we are a little bit more bullish than bearish on this one, and in a way, our next target is that this 48.42 territory, so keep your eyes on that one. In terms of the downside, we would need to see a break of this upside line here, and a drop below the low of the 21st of August here, near the 43.62 territory right here, and then yes, lower levels could be met. For now, be very careful, be very cautious, and yep, like I said, for now we are a little bit on the bullish side. Now jumping into gold here, and this is what I was talking about this week and last week, and basically as long as the commodity remains inside between these two lines here, between the medium-term upside support line taken from the low the 20th of March and the short-term downside resistance line taken from the high of the 7th of August. Now, as long as it kind of stays in here, we will take a bit of a cautious approach, neutral, maybe somewhat neutral. But if it starts pushing through this downside line, breaking this downside line, and then pushing above, now previously I talked about the 1976 level, but if it starts now moving above this barrier, the high of Monday, or in other words, the current highest point of this week, near the 1962 territory, then yes, we could aim for the upside again, and we could target some higher levels. Now, again, for now, guys, like I said, we are a little bit on the neutral side. We're keeping a close eye on this medium-term upside support line, but if that gets broken, well, I mean, this could turn out to be a little bit ugly here for the buyers, especially if the price falls below the 1863 territory, which is marked by the low of the 12th of August. Now, jumping into Bitcoin very quickly, Bitcoin is declining a little bit here. It has fallen yesterday. It has fallen below the 21-day EMA here and kind of remained there. So in a way, there is a potential for this one to kind of drift a little bit more to the downside. However, this move lower could still be seen as a temporary correction. Because we are still trading above this upside support line taken from the low of the 13th of March. Now, although this line is a little bit on a tentative side, because we kind of do have a huge space right here, and but still we'll keep an eye on it. Maybe this will be that third touch here from where the crypto will rebound and move higher. So for now, like I said, we are aiming for slightly lower levels here, but only up until this upside line. AUDCHF, so jumping into a few pairs. Here I've spoke about this pair recently, and basically what I would just wanted to say that we continue to monitor this kind of this wedge here, or if you want to, we can call it symmetrical triangle. So we need to see a clear breakthrough one of these lines before we could consider the next directional move. So like I said, keep your eyes on these two lines. Also keep your eyes on the downside. Keep your eyes on the 0.6493 territory here, which is marked by the low of the 14th of August, or in other words, the lowest point of August at the moment. If we get a drop below this, then yes, of course, this would confirm a forthcoming lower low, and more sellers could be joining in here. Now, in terms of the upside, of course, we need to see a break of this downside line here, taken from the high of the 5th of June, and also a push above the 0.6687 territory here, marked by the high of marked by the highest point of July, and a nice good pop above it, yep, may open the door towards higher levels. So in other words, guys, we're waiting. USD JPY. So I talked about this one on Monday. So basically here, what I was saying on Monday, that the pair, last week the pair did decline lower. Excuse me. The pair did decline lower. However, it found support near this 105.30 territory, although we did get a few overshoots here, but nevertheless, it failed to kind of keep the daily candle below it, and then kind of we saw on the 19th of August a sharp reversal here to the upside, where where the pair hit the 106th zone, but then kind of declined a little bit. So basically, it got also held by this 21-day EMA, and then we saw this, like I said, this little decline. And now on Monday, what I was saying here, that basically keep your eyes on this potential kind of little short-term bullish flag here, because we have a nice pull here, and this is the little correction that that was happening here. And yep, for now guys, for now we are seeing a nice move higher, so hopefully this could continue pushing further north, but if we does push further north, we'll still be very careful, because this whole move higher could be considered as a temporary correction, because if this downside line taken from the high of the 24th of March remains intact, yep, this whole move higher could be seen as a temporary correction, guys. So that's why be very careful here. Yes, for now everything's looking quite positive on the very short term, from the very short term perspective, but like I said, let's be very careful here in case if the indices start reversing to the downside sharply here. If we see European indices moving lower, and then the US ones as well, then maybe this pair could start moving back down here because of the increased yen buying. But from the technical side here, if it drops below the 105.30 zone, this is when we will aim for lower areas. Now jumping into GBP CAD very quickly. For now, basically, the pair is still managing to balance above the low of the 1st of July, and basically for now, yes, we will continue monitoring this upside line. The fact that it's still balancing above it, yes, of course, gives a bit of hope here for the buyers. However, as I mentioned to you guys previously when I was covering this pair, ideally a pushback above the 1.7457 zone here could do the trick for more buyers, and it could open the way towards the highest point of July near the 1.7675 level. So keep your eyes on this one. In terms of the downside, as I mentioned also to you before, a drop below this upside line and a drop below the 1.7247 zone could do the trick for more sellers. So that's why keep your eyes on this one. And if we do get such a move here below this level, then yep, our next target could be somewhere around here, maybe near the 1.6942 zone, and then yep, we'll take it from there. And GBP-CHF, also quite an interesting one as well, something that I continue to monitor carefully, because what I'm looking here for is a break of this barrier here, the 1.2037 zone, because it continues to provide decent resistance. The fact that the rate can also is balancing above this upside support line taken from the low, the 29th of June, is also kind of providing that positivity. However, like to be on the safe side, yes, we will continue waiting for a break of this 1.2037 zone in order to get a little bit more comfortable with higher levels. So keep your eyes on that one. And finally, Euro USD. So on Monday, I was talking about Euro USD kind of moving a little bit lower here, but as you can see, on Monday, yes, it did drift lower. On Tuesday, yesterday, it reversed to the upside, managed to get back above the 1.1815 level. And let me just kind of remind you what that level is. This 1.1815 level is the highest point of September of 2018. So the pair got back above this 1.1815 zone, and yep, now basically what we're gonna do here is we're gonna remain very careful. Today we're seeing a bit of a decline here and a test of this 1.1815, but if this area now does provide decent support and the rate starts moving higher again, then yes, of course, we'll aim for the high of last week near the 1.1965 zone, a nice good break of which may open the door towards that psychological 120 zone. But if the pair starts moving lower here and by any chance falls below the 21-day EMA, which as you can see continues to provide decent support, now this is where it could become a little bit more interesting for the sellers, as this could increase the chances of a possible test of this 1.1725 level again, or this short-term upside support line taken from the low, the 14th of May, guys. So again, for now, be very careful. Keep your eyes on this 1.1815 level, which is currently kind of acting as a magnet here for this pair. But if it starts dropping below this and below the 21-day EMA, then yep, we'll keep an eye on this upside support line taken from the low, the 14th of May, yes, and then we could take it from there. Now, guys, I hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my trader's tea time is always 13:15 GMT time. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.